Good morning, everyone. Uh, Today, I'm just recording this video because lots of companies are asking us, what's the trend for rupee? Well, more than the trend, I think it's important that we understand that whether we are following our policy or not, and is our expectations for the rupee getting extremely skewed because of the recency bias that we have? Possibly, I'm recording this video because it's a time to take a reality check. And I'll tell you why. When hundreds of companies I'm interacting, they are all saying that, rupee is weakening. Why should we cover? What do you feel about rupee? Isn't it going to 84, 85? And at the same time, in the back of their mind, there is a sense of discomfort that what if rupee comes to 80? Will we become uncompetitive in the current environment? Business in US, Europe is slightly tricky. What should we do of our covers? So there is an element of complacency, confusion, and fear, which people are having. And of course, rupee has weakened in the last 1 year because of current account issues, because oil was up, because of the real interest rates in the US has gone up. So a lot of money is going there. And we're getting 5% in US government bonds, while you would look at other markets. And also, we lost a lot of foreign exchange reserves, protecting the rupee. So rupee broadly depreciated by around 10 odd percent in the last 1 year. Now, the point I want to make here is that if you look at last 20 years data, the average depreciation of the rupee has been around 3 odd percent. And the average forward premium is around 4%. So on a rolling basis, there has always been an element of carry that you were supposed to gain. And that could be anywhere between 1 to 1.5%, depending on what block of 5 years are you talking about. So my humble submission is that the rupee has depreciated already by 10%. The room for year-on-year depreciation of the rupee, the probability is less. So even if the premium is around 2 odd percent in the current environment, I don't think it's a great idea to be underhedged. The rupee always comes and converges to the mean. We have seen that in 2008, 2013, we have seen in 2020, and now we're seeing in 2023, and it's not going to be any different. The world is not going to end. The US dollar is not going to keep on appreciating the way it has appreciated in the past. In fact, it has already depreciated by around 8-9% in the last 2-3 months. Obviously, rupee has not appreciated in the same fashion, but I think when the US interest rates are going to get topped out, maybe in a month, 2, 3, I don't know, but it started hurting already. And if the interest rates are going to get topped out, we are going to see a fresh rally towards all the other currencies, and the dollar is going to get weaker. And I am of that camp, and I feel that if it is true, that in that case, you will be completely underhedged, and your businesses will become incompetitive. And suddenly you will not be able to hedge even at 81 or 80 because you will still be waiting. So I think don't change your policy. You can change the strategy. Instead of forward, you can get into options. You can get into risk reversal option, which gives you a good band. You can look at baggier options if it is suited in that environment. But do not change the band, because as I was talking about that 1% saving, if you're running a 500 crore book, you already had a mark to market in the last 5, 7, 8 months. Now, if you change your strategy and bring your book to say 40% or 30%, and you are running a book of 60%, then when the time comes to make money, you are going to lose money. And that always happens. I've seen that multiple times. So if that's a fear, use options and do it. But I feel even a forward and an option strategy works well in the environment. So do not bring down your hedge ratios majorly down. Maintain that. If you don't want to get aggressive, don't be aggressive. Use options that will help you. But don't get into that complacent environment that will wait and watch. Even waiting and watching is, and not doing anything is like doing something. That you have taken a call that you're going to keep your position open, right? So my understanding is that the first signs of CAD improvement have already started happening. January numbers were 17 odd billion. Average would used to be last 5-6 months, I think it was 25-26 billion. And so if we start seeing improvements happening, the appreciation was going to be pretty strong. So position yourself accordingly. At IFA, what we do is we don't put so much of brains. Our model is capturing all the factors automatically. We just follow the model. Currently, our model is showing that yes, there is an element of rupee depreciation. But as soon as the first tick of current account real rates or the walls are going to improve towards rupee appreciation, the model is going to change and hedge ratios are going to get more aggressive when it comes to coverage for an exporter. So just follow a systematic policy. Don't get super complacent. And with every conversation, I would like to give you a takeaway. And this time, my takeaway is that run your rolling strategies, and also to make money. Since IFA also has a wealth division, we have been asking our clients to start taking duration, start looking at buying bonds for 10 years, because in case of India also, we feel that the rates are going to top very soon. As soon as US rates top, India rates are going to top. And if you're buying and putting your money for a 10-year bond, then those bonds will get expensive if the interest rates fall. So if the interest rates fall, a 10-year-old bond with a modified duration of 7, if the interest rates fall by 1% after 1 year, you're going to get a return of 14%. If the interest rate falls within 2 years, you're going to get a return of 10%. So where equities are not looking so good because the interest rates are high, these bonds are a very, very good avenue to get 10 plus returns in your portfolio, whether it could be a company portfolio or it could be a personal portfolio, right? That's my another takeaway for today. Stay tuned. If you like what I say, just subscribe to my YouTube channel. And I wish you all the very best for 2023. Stay tuned. Thank you.